Newcore Gold, we're advancing the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by very robust economics that we outlined within a PEA in April of this year. In terms of, I guess, I should tell you that I will be making forward-looking statements, so make sure you go and read that. We are listed on the TSXV. We also trade on the OTC, so we've got good volume in the stock. Trades about 275,000 a day. And in terms of Newcore itself, we've got a management team and board who are truly aligned with shareholders through our 18% ownership in the business. This is stock that we've bought alongside shareholders over the last number of years. As I mentioned, we've got a PEA, which I'll talk about in some detail, that fundamentally underpins the value of the company. And then Ghana, it's a tier 1 jurisdiction to be operating in. In terms of the team, my background, I spent the first 20 years of my career on the investment banking side of the business, 12 years in London, covering all the big global natural resource funds out of the UK and Europe, advising different ASX, TSX, London-listed companies, primarily on different mining opportunities. Our board, very strong board, Doug Forrester, Blaine Johnson, Ryan King, all behind Newmarket Gold, which was a $10 million company that sold for $1.4 billion year and a half after relaunching it. Caliber Mining, some of you may know, bought the B2 Gold assets in Nicaragua and recently bought Marathon and have grown that to a $2 billion company. So a very strong team behind Newcore. We're also very well supported by the capital markets and deep-pocketed institutional investors. So we're currently 45% institutionally owned. Franklin Templeton's our largest investor at about 9.5%. Rough Red of London owns about 7%. Aegis out of the US, 8%. CQS owns about 5%, and then 3 to 5% for the rest of those. If any of you know Justin Chan at SCP, he's wandering around the conference. I would encourage you to go find him and ask for his opinion on Newcore and our Enchi project. In terms of the project itself, it's a very large project, 248 square kilometers in size. We've identified over 25 targets to date, of which we've only drilled on 9 of them. Ghana, we view as a tier 1 jurisdiction to be operating in. It is Africa's largest gold producer. It's the 6th largest gold producer globally, just behind Canada and the US. It's important for the economy, it's important for the tax base, and also there's a huge amount of skilled labor in country as well as service companies for us to leverage off of. But what we always say is don't listen to me. I'm 100% biased, but look at what the major mining companies are doing in country. You've currently got 3 of the top 10, Newmont, Anglo, and Goldfields, with significant operations in country. We've also now got Zijin, who will be coming in on the back of their $1 billion acquisition of the Akim asset. So I think this speaks for itself in terms of what a tier 1 jurisdiction it is. These companies can invest their capital anywhere on the planet, and they've decided to put it into Ghana. Earlier this year, we put out a PEA in April. That was very well received by the market, given the tremendous economics that we outlined, and I'll walk you through some of that now. What we put out was a very simple open pit heap leach project. We've got deep oxidized material on our project, so it lends itself very well to a heap leach project. We used a base case of $1,850 gold. At an $1,850 gold price, we have an after-tax NPV of $371 million, after-tax IRR of 58%, and one of the things that really helps drive those economics is the fact that it's much lower capital to build a heap leach operation and a very nice production profile of 122,000 ounces per year. Here's that production profile. Again, 122,000 ounces per year with peak production of roughly 155,000 ounces. With all of the district scale exploration that we've got on the project, our expectation would be to extend the mine life well beyond 9 years. But given the economics of this project, it makes sense for us to put it into production, and hence the reason we're taking it to a PFS as our next step. From a cash flow perspective, at a $2,350 gold price, we produce after tax $855 million of cash flow. You can see that profile here, and obviously that can then be used to unlock the district scale exploration that remains beyond what's captured in this PEA. One real simple way of looking at it is from a valuation perspective. What I outlined was the economics at $1,850, $371 million after tax NPV. For every $100 move in the gold price, we add roughly after tax US $50 million to the NPV of the project. So we're adding the market cap of the company today for every $100 move in the gold price. When you then get to $2,350, which at the time was where gold was trading, the economics are just spectacular. $632 million after-tax NPV, 92% IRR, and a 1.1 year payback. I'd challenge anyone in this room to go find a project with economics like this that sits within a company valued at $50 million US today. So when we look at that compared to the $632 million after-tax NPV, that has us trading at less than 0.1 times the NPV of the project today, which we see as a tremendous opportunity for investors. Beyond the economics of the project and what we outlined within the PEA and the fundamental re-rate that we see for shareholders as the market starts to properly price in the value of our project, we've got district scale exploration. We're based in the southwest of the country. You've got two prolific gold belts in Ghana. You've got the Ashanti Belt, which has some of the largest deposits on the planet, including Obuasi at 66 million ounces, Tarkwa at 25. You've then got the Sefwi-Bibiani Belt, which is not as well explored, just given its proximity relative to Accra, but we've got very large neighbors along trend from us. So to the north, you've got Chirano and Bibiani at 5.5 and 6.5 million ounces. You've then got Newmont's Ahafo project, which they're investing another $1 billion into, sitting at 20 million ounces. So great neighbors along trend from us. In terms of that district scale exploration, as I mentioned, 248 square kilometers in size. We've identified 25 targets, of which we've only drilled on 9 of them. Our existing 5 resource areas, Sium's the largest, followed by Boeing, Nyam, Kwachikrum, and Tokasea. All of these resource areas do remain open along strike, so systematically going and continuing to chase these structures is something that we will focus on, looking to grow the overall size of the resource, and extend the heap leach operation. Beyond that, we've got a number of previously drill tested areas, including Irati, Kojina Hill, Nkwanta, Sium South, where we've made discoveries that warrant follow-up drilling. And then outside of that, we've got an additional roughly 15 or 20 pure greenfield targets that we've got at various stages, whether it's soil sampling, trenching, but are working up to ultimately drill. So when we talk about district scale exploration, this is part of that opportunity. Beyond that is the opportunity at depth, and this is something that we're extremely excited about. What you're looking at here is a long section of our Enchi project, so looking at it from the side. When we compare that to the Toronto mine, and if you looked at Bibiani or Newmont's Ahafo mine, they'd look very similar. What you'll see is these deposits really grow in size and increase in grade. Today, the resource that we've got sit within pits that average only 75 meters, and the average drill depth on our project is only down to 100 meters. When you superimpose that 75 meters at our project and compare it to Toronto or Bibiani or Ahafo, where you'll see a lot of these deposits really grow in size and increase in grade is as you start to drill deeper. To put that in perspective, Toronto is currently mining at 800 meters below surface, 1.5 to 2 gram per ton material. So at 75 meters, we've really just scratched the surface and we've started to have some great higher grade results. We did put out an underground resource last year to start to highlight and prove up this proof of concept and the opportunity at depth. That was 136,000 ounces of underground. About half of that came from our NCAUF deposit. When we look at some of those results in a little bit more detail, I think you'll start to see, the shoots that we've ultimately identified on our project. So here at NCAUF, what you're looking at, here are the pits that ultimately constrains our heap leach material. As we started to drill deeper, we hit 5.8 over 7 meters, 5.6 over 8, 5.4 over 9. This hole here, 6.5 over 4, is not sitting within our resource because it was drilled afterwards. But it's pretty clear to see, one of these high-grade feeder zones that we've identified. 500 meters to the south of that, we've hit 3.2 over 9, 7.4 over 8, 3.5, 6 over 6. Another one of these high-grade feeder zones that ultimately we think will continue to extend at depth. Importantly, we're still only down at about 250 to 300 meters below surface. When I now pull you back from this and we look at it from a little further out, it's pretty clear to see that there's no drilling to the north, no drilling to the south, limited drilling in between, and no drilling beyond that 250 to 300 meter level. So the opportunity is for us to go back into areas like this and look to ultimately prove up that there's a much larger mineralized high-grade zone that sits. So my view is you get all of this for free, as well as all of that near-surface expansion opportunity for free, given all the value in the company can be underpinned by the PEA that we ultimately released. In terms of what we're up to today and what we're going to do over the next year or so, we kicked off a 10,000 meter drill program, which was announced at the end of June, and we started drilling in July and August. That 10,000 meter program is fully funded. We've had some very good initial results from that. We've put out 21 holes thus far, which represents about a third of the 10,000 meter drill program. And this week, we actually put out our highest ever intercept on the project, 204 grams over 1 meter. That's the highest grade meter intercept we've ever had. So needless to say, we're extremely pleased with that. Within that same press release, and I would say as noteworthy, we intercepted 3.4 grams over 28 meters. Within that, we hit 8 grams over 11 meters. That's well above the grades that we've got on our project. In October, we put out some additional results. What you're looking at here, again, these are the pits that constrain our current resource. We pushed these holes beyond those pit limits and hit 2.2 over 28 meters, 2 grams over 11 meters. So this is hopefully going to accomplish our goal of resource expansion by driving those pits deeper and adding ounces to the project. When we then go into the 3D model and have a look at that, I think it really starts to highlight where that growth can come from. Again, here are the pits that currently constrain our resource. Here are those intercepts that I was just highlighting, which you can clearly see sit well outside of the current pit limits. When we then put, some of the blocks onto those from our previous model, our view is that, we will be able to grow the resource by ultimately driving these pits deeper. But within the rest of the results that we've put out, we've also accomplished our goal of converting ounces, or at least we think accomplished our goal of converting ounces from the inferred to the indicated category. So maybe just to sum it up, and I'm conscious I've gone over time, but I guess that's the best thing about being right ahead of lunch, is, Newcore Gold, it's a company that's backed by a management team with a proven track record, who's truly aligned with shareholders through our 18% ownership in the business. Very strong capital structure, 210 million shares outstanding with 45% institutional ownership who recognize the tremendous value of our project. We do sit on a belt that hosts a number of multi-million, 5 million ounce plus deposits. The company is fundamentally underpinned by a PEA that outlines extremely robust economics, and I'd welcome any of you to bring a project forward that's got better economics. And then district scale exploration that has been untapped across our project, near surface, as well as the fact that we've only drilled down to an average of 100 meters.